In 2023, the banker Mum and Dad injected over $2.7 billion in the property market, with their total financial support estimated to exceed $35 billion. Today, we're diving into the dynamics of the banker Mum and Dad and breakups. As of February 2024, CoreLogic reports that the national median dwelling price in Australia has reached approximately $760,000, with a 10.4% rise in property values across the 5 major capital cities over the past year alone. In response to the challenges, a growing population and insufficient housing development, Australia has faced significant pressure on its housing supply. Despite the surge in immigration, the country has struggled to keep up with the demand, leading to a notable scarcity in housing availability. A report from 2021 highlights that Australia has one of the lowest rates of housing supply per capita amongst developed nations, with only 400 dwellings available per 1,000 people. This underproduction has contributed to heightening housing affordability issues and underscores the need for strategic policy intervention to increase housing supply and address the imbalance between supply and demand. And increasing the number of parents are recognizing the challenges that their children face in entering the property market. As a result, it's becoming increasingly common for them to offer their support to help their children get started and get a leg on the property ladder. Parents typically assist their children in entering the property market through two main methods: by either providing funds in way of, say, gifted monies, or by acting in way of a guarantor. When parents give money to their children, banks will want to know that these funds are gifted, meaning that children don't have to pay it back, and more importantly, that the parents don't hold any interest in the property. They want to know this to make sure that the money isn't a loan, as will change the way the bank views these funds. With a guarantor home loan, parents use the equity in their home as security for the child's purchase. As an example, if the parents own their home and it's, say, worth $1 million and their child wants to buy a home for, say, $700,000, then 80% of the loan would be secured against the child's purchase, with the remaining 20% secured against the parent's home. And the child is responsible for both loans and allows them to borrow the full purchase price. The parent's risk is limited to the amount guaranteed, and in this case would be a total of $140,000. While the exact number of couples who purchase a home together and later separate is unclear, consider that Australia's divorce rate hovers around 30%, and there's a notable risk of separation. So what does it mean when it comes to breakup? As a parent, if you've gifted your child $100,000, you might naturally want this amount to be returned in the event of a breakup. However, the outcome might not always align to your expectations. The division of assets in separation law involves more than splitting up everything equally post-breakup. The process involves identifying all assets and liabilities, assessing individuals' contributions such as inheritance or gifts, considering each party's future needs such as health issues, employment prospects, and even dependents, and then deciding on a fair division tailored to individuals' unique circumstances. And looking now to a guarantor home loan, since your support is in form of a loan, the debt associated is considered a part of the asset division. This arrangement ensures that upon settlement, the debt is resolved without your guarantee being transferred to your ex-partner, offering a clearer financial closure compared to gifted funds. However, there is a risk when your child borrows 100% of the property's value. If they do decide to sell, they might not be able to cover the entire debt due to additional costs like real estate agent fees and advertising costs to sell the property. And it's because of this, it's an important factor to consider. And in the event that consent orders are required, the court will want to ensure fairness, whereas a binding financial agreement doesn't require the court's input but necessitates independent legal advice to ensure that both parties are fully informed. I guess what I'm trying to highlight here is that breakups don't follow a one-size-fits-all approach, meaning that without prior planning, there's no guarantees that the gifted funds will be returned to you in full. However, there are strategies and agreements that can be established in advance to ensure that clarity and mutual understanding about the division of assets, including any gifts in the event of a breakup. Right from the start, it's essential to consult with a legal professional to ensure everything is handled correctly. So before any funds are gifted, having the right documentation in place upfront will allow you to specify the outcome in case of a relationship breakdown. This is particularly crucial if you, as a parent, are concerned about the return of the gifted funds to your son or daughter. This documentation will guarantee that a predefined process is adhered to and that nothing is left to chance. And if you're looking for a great mortgage broker, here at Hunter Galloway we can help. We service across Australia and don't charge a fee for our service. So reach out and call us on 1300 088 065 or visit us online at huntergalloway.com.au. Thanks for watching, and until next time, I'll catch you then.